For tax, I think in 5 years ago, tax is a item that must be exempted in your ACCA F9 exam. In recent years, I still found the examiner comments saying that the people, they don't understand well about the ACCA logic. So I would like to explain here. For the tax item, okay, the first point I highlight here is very important. Tax is payable 1 year in area. So what does it mean? Okay, what does it mean? If you make the profit, you have to pay tax, right? Okay, for example, you make the profit in the first year by, say, $100, and tax rate is 30%. Then your tax cash flow, when will it be happen on the tax cash flow? It will be happened on second year. Okay, for the second year, you make the profit. I mean the cash flow, maybe the profit. Okay, here 200. Then the tax happen will be on third year. So here is the 1 year in area. Okay, remember, you make the profit in the first year, you pay tax in the second year. Okay, here's the key concept. Some students, they are confusing, okay, or they're a bit nervous in the examination hall. Maybe you are taking the computer-based examination, you are in the computer room, you forget. Okay, maybe you forget. You know it, but you forget in the examination. So I repeat again and again. Remember, tax, okay, it's normally payable 1 year in area. Okay, it's the ACCA rule. Okay, remember the rule by ACCA. Okay, maybe it's not the same in your countries, but in ACCA they are thinking like that in this way. So you have to follow this logic. And for asset written down value, it means the depreciation. Okay, they are using reducing balance method. Okay, it's but the question will stay clear. I found in recent 5 years they seldom keep it silent. Okay, they usually sharing with you how to get depreciation allowance. There are sufficient profits to absorb all capital allowance, and the last one I think is also important. The sale of asset will give rise to balancing allowance or balancing charge. Okay. What is it? Okay, I will share with you one example to show you what is the balancing allowance or balancing charge. So don't worry, okay, just keep in mind. Okay, one more example to share. So read it. Okay, welcome back. Machine costs $1,000, has 4-year life. Okay, at the end of which time it will be sold for 400 scrap. So the scrap value is 400. Okay, I would like to highlight it this way. 400. Okay, very important. Scrap. The corporate tax rate is 35% and payable in 12 months' time. In areas and a system of 25% written down allowance. Written down allowance. Okay. On reducing balance method is in operation. So computer tax relief applicable to the machine. Assume the machine is bought on the last day of previous accounting year or second on the first day of the accounting year. So here is asking you about years 0, 1, 2, 3, 4. Okay. If it is bought in the last day of previous accounting year. So the depreciation allowance will be happen in the year 0. But if it is bought on the first day of the accounting year, the depreciation allowance will be happen in the first year. Okay, so understand and make it, okay, it's not that part of difficult. Okay, I would like to write it down in this way when calculating NPV questions. Okay, I would like to use a horizontal presentation method. Cost. $1,000 is 25% on reducing balance method, right? So 250 and the balance 750. Okay. Any tax in the first year, in the initial year? No. No tax relief or no tax impact. Why? Because tax happened in 1 year in area. Okay. Remember this rule. This is very important, okay, for tax. So I'll write down, okay, because I remember this rule, 250 times the tax rate is 35% means about $88 tax saving or tax relief in first year, right? Okay, so in the first year, what is the written down asset? Written down allowance. Written down allowance. Written down the written down allowance is 750 times 25%, right? Okay, 750 times 25%, it comes to 188. So it's with the written down allowance. The balance will be 750 minus 188, so it comes to 562. Okay, so here I'm going to draw a line here. I remembered, okay, I need to alert myself, okay, 188 times tax rate, 35% is the tax relief, 66. Okay. So this 562 here times 25%. It's 141. Oops. The balance is 421. Okay. Based on the same logic, 141, okay, the tax relief, 49. Written down allowance 105 for in the third year. So the balance is 316. Okay. In the questions, okay, 4 years life, right? And in the fourth year, at the end of fourth year, the scrap value is 400. It's 400. So you can still enjoy tax relief because it is happening in the third year. The written down allowance in third year, but the tax relief in the fourth year. So 105, you can still enjoy the tax relief, which is $37. But here, is it any written down allowance? No, because you sold it at 400. 400, okay, is greater than 400 is greater than the balance, 316, right? So the difference is, do you need to pay tax by selling at 400? Yes. So we call it is balancing charge. You have to pay tax, okay? Because you make money. You sell at 400, and your book is only 316. So you make the profit. Then it's a balancing, which should be chargeable to tax. Okay, it's not tax relief. You have to pay tax. How much tax to pay? It's 84 times the tax rate. Tax rate is 35%, right? So $29 minus, okay, is your tax cash outflow in the fifth year, or a tax payable. Okay, key concept, balancing charge. Yes, I would like to make a mark. It's balancing charge, 84, and you have to come to pay tax in fifth year. Okay, on another question, if it is happened on the first day of the accounting year, on the first day of accounting year is different. Okay. It means the written down the allowance is in first year. It's not in year zero. Okay, so 250 in the first year. The balance 750. Okay, follow the same logic. Okay, I'll make it a bit faster because these numbers should be more or less the same as before. Because I would like to highlight in the fourth year. Okay, in the fourth year, the scrap value is 400. So here, okay, so here 400 is smaller than 421. So here 21 here, because in your book the balance is 421, which is more than the scrap value. So it seems you make loss, right? You sell it at the price lower than your balance, the book balance. It is a loss, honestly. So the tax authority, if you want the allowance here, they call balancing allowance, is 21. So it is the tax relief in the fifth year based on $21 times tax rate 35%, which is $7 in the fifth year as the tax relief. So the concept here I would like to explain is by showing these calculations or example on handling tax. The most important part is that student knows what is the balancing charge, balancing allowance, and what's the impact on the tax. Is it tax relief or tax payable? In this case, the balance 316 is lower than 400, which is the scrap cost, the scrap value. So it comes to a balancing charge 84, and you have to pay tax in 1 year in area. And in this case, it's 21 and 7. 21 and 7. Okay, here is the balancing. Sorry. Here's the balancing allowance. Okay. So I hope it makes clear to you about the balancing charge, balancing allowance, and how to handle tax.